The common narrative is that this bear market is simply caused by apathy. So not enough new people entering the space, a lack of interest in crypto, and early investors, insiders, venture capitalists cashing out. And while this is partially true, there's another part of the story as well. And Hyperliquid is included in that story. Something happened on the 10th of October. This was the day of the flash crash. Many altcoins within a few hours crashed by 60, 70, potentially even 80%. And that was due to cascaded liquidations. So the price went down, people got liquidated, the price went further down because of the liquidations, triggering more liquidations, etc. So it's cascading to the absolute bottom, and that caused the total value locked, so the capital that's in Hyperliquid, to suddenly not grow anymore. The 10th of October was the peak. Since then, we see outflows from the platform. Now in this video, we tried to figure out whether or not it still makes sense to buy the HYPE token. Will this potentially turn around? Does it make sense to buy low? Because in the end, crypto is all about buying low and selling high, buying when most people do not want to buy. Now there are capital outflows. Unfortunately, there are also slightly reduced revenue numbers. Now the revenue numbers do fluctuate, but again, the 10th of October marked a peak, and since then we slowly decline. Here is that flash crash. This is the altcoin market cap, so that's others. It went down by 48%. Many people lost all of their money, and then a few market makers bought up at those depressed prices, and they seem to now continuously offload their cheap purchases. So the altcoin market cap continues on its merry way down. In isolation, the 10th of October was very positive for most market makers. Hyperliquid has its own market making strategies, and everybody can deposit into that market maker strategy. And so we can see how much money did people make on the 10th of October. That day was very profitable, but there is a catch. Have a look at the Hyperliquidity provider. This is how much money the market maker of Hyperliquid made over time. Everybody can deposit into that vault, it's called. So that's a capital pool where the market making generates profit. And have a look at this. This started in May of 2023, and it took more than 2 years to generate 80 million worth of profit. And then came the 10th of October, which pushed up the profit by another 42 million. So in one day, this market maker made more profit than it did on average over the course of an entire year. So in isolation, this looks very good. But have a look at this number here. In the past month, there was 0 gains that have been made with market making. So it used to be a profitable business, got a very nice boost of probability in one day, but now has died down afterwards. That's not very encouraging. And it might be one of the reasons why the liquidity on the platform continues to go down. I don't really like doing it, but that's how the YouTube game works. That's how the algorithm works. Please give this video a like if what you've seen so far has been useful. Thank you very much. It's not profitable anymore to provide liquidity for market making on Hyperliquid. But again, is this potentially an opportunity? What we see over here, that's the HYPE price relative to the altcoin market cap. And we have come down by 34%. So Hyperliquid did worse compared to the rest of the altcoin market, but it seems like we are close to a support. Have a look at what happened when we zoom out. We have seen bounces from that support of the magnitude of more than 40%. Now there are several reasons for this recent decline. We've talked about the potential risk that Hyperliquid might not grow that quickly anymore. But there's another potential reason for this recent decline. And if that reason is really the main driver for the bad performance, that's not good at all, because the reason will persist. Here is that reason. It's tokenomics. The team can finally start to cash out, and they're getting token unlocks of more than 100 million per month. So we've got 100 million of selling pressure every month for the foreseeable future, at least for the next 2 years. And the fundamental question is, are we going to see an additional 100 million of demand for HYPE given the current momentum? Maybe there are going to be some speculative purchases, again, given that we are at the lower end of the trading range. But many bulls of Hyperliquid got very much disappointed on that 10th of October. Have a look at the mass of liquidations on that day. 830 million worth of long liquidations. This is how much capital was directly lost. We tended to have very positive funding rates for Hyperliquid prior to the 10th of October. Now they are still positive, but they're not as positive as they used to be. So there's still some market making being done here. But many long-term holders of the Hype token through perpetual futures, they had to give up. And the problem is that it's not just the revenue of the platform that's declining, it's also the short-term interest in the token that's going down. So you see over here, that's the open interest, how many bets are currently made on the Hype token over time. Here is again the 10th of October. We saw a bit of a recovery subsequently, but now the momentum still stays negative. We are now at 1.3 billion of open interest, half of what it used to be. Even the trading volume on the perpetual futures themselves is going down. So it seems like the supply is growing over time, the team is cashing out. It seems like the platform itself isn't growing right now. At the same time, with declining interest, we now have potentially locked up supply that might get released. So the staked supply. Because here's the thing, we can stake tokens directly on Hyperliquid. And that staking leads to lower fees when trading. Now, for everybody that's still actively trading, staking Hype tokens makes a lot of sense. But if you quit the platform altogether, then at some point you might also unstake your Hype tokens and might sell this off, which then leads to more selling pressure of the token. So that's the secondary risk factor coming from the slowdown of momentum. Yes, again, short term, we could see some kind of rally. We might have a few speculative buyers that push up Hype by another 20% versus the rest of the altcoin market. In the very best case, it could be 40%. But I'm not sure if it makes sense to bet versus the general trend. And the general trend, unfortunately, right now is bearish. The category itself is struggling. Astadex, for example, also sees outflows right now. And while Hyperliquid within that category is still relatively solid, when the market as a whole isn't growing, the continued selling pressure through tokenomics is a real problem for the Hype performance relative to the rest of the altcoin market. Now let's look back. In 2025, the average Bitcoin investor pretty much got nothing. There were no gains, there were no losses, went slightly down by 8% roughly. The average altcoin investor, however, suffered much more. This is the performance of smaller altcoins in the last year. Many of them are down 70, 80, or even more than 90%. And that's really why sentiment is so bearish. It's most people owning many different altcoins, having a diversified portfolio of alts, and then underperforming massively, while other risk-on investments are actually doing fine. The Nasdaq 100, for example, appreciated this year. The problem really is that those smaller altcoins get hyped by influencers. YouTubers say that you should buy this small altcoin or that small altcoin. You're taking on much more risk than you should. And then in the end, you end up losing 50, 60, 70, maybe even 80% in the span of just a single year. If you used leverage, you probably already lost everything. This is the others market cap. And there was the flash crash on October 10th, where the average altcoin fell by 48%. So if you had leverage above 2x on any altcoin, you lost it all. And this was all just due to mispricing, right? We went back up quite quickly again. Those purchases, of course, had not been made by the average Joe. This was algorithmic trading. And now those algos are selling off their allocation over time as well. Many projects went from the billions of dollars, Bonk for example, to just a few hundred millions. 4 billion down to 600 million. Or here, SPX 6900 from 2 billion down to 400 million. Or over here, Fartcoin also above 2 billion. Now just slightly above 200 million, a drop of 90%. Or here, Dog with Head, 4 billion down to 300 million, a drop of more than 90%. Now, interestingly enough, you are still watching crypto content, so hopefully you haven't lost everything. But if you're just in Bitcoin and you have lost maybe 8% this year, that's not ideal either. It makes sense to change approaches, to not try to find the next 10 or 100x altcoin, because this is not the market to try to make those gains. Currently, the attention on crypto is very low low, and it does need a lot of attention for those smaller altcoins to rally. This is not the time to buy those very risky bets. It's better just to focus on long-term compounding. Now, how many of those other YouTubers that you're following in crypto is actually willing to share their own data, their own performance data over time since maybe starting to trade? I actually do not know a single one, but feel free to comment down below. I am willing to share my data though. This is my trading portfolio over time. This is a monthly chart, and this is going up for two reasons. It's going up because I regularly dollar cost average into that portfolio, but it's also going up because it outperforms just buying and holding Bitcoin. This year I did make money. So have a look at this. This is the monthly performance versus Bitcoin over the same time period. Every dot here represents how much I did better or worse compared to Bitcoin in that specific month. And what we see here as a dotted line, that's the 12-month moving average. Now, the overall average of all of those dots, that's 1.9%. So over the last 50 months, I have on average outperformed Bitcoin by 1.9% per month. Now, I don't just show this in order to brag. Of course, I do want to show my credentials here, but on the other hand, I also want to show how much volatility there is. There are some months where we underperform Bitcoin. There are other months where we outperform. The long-term average is what matters, and that's realistic. 1.9% per month is definitely achievable. The 10x or the 100x might be achievable with one position during a bull market with a specific lucky bet, but it's definitely not realistic long-term for an entire portfolio. And I don't just want to share my own performance. I also then started in July of 2025 a 5-month copy trading beta test. So every annual member of premium of this channel was able to deposit into that pool, and whatever trade I made was automatically reflected in the portfolio of the members. Now, this was a very actively managed project, and so here the outperformance versus Bitcoin is more than just 1.9% per month. But that's what diversification gives us, right? It gives us a bit more stability, but also muted returns. But here's where I think I'm different to all of those other influencers that only talk, but that don't really show their data, that don't really prove themselves in the market. If all of those influencers are so successful and they make those 10x returns so regularly, why don't they just open a similar kind of copy trading pool and then take a cut of the gains? The reason why they don't do this is because they don't outperform. They simply just make content on YouTube and then get some advertising money by YouTube or potentially even by individual crypto projects, right? Very often when those small altcoins get promoted, it's just because the influencer got a kickback from the project. By the way, I never took any money from any crypto project ever. I only have the premium membership of this channel. I have the affiliate link for Ledger. I've got the affiliate link for TradingView, so those are two tools, and I've got an affiliate link for Hyperliquid. That's a platform that I use myself where you can reduce your trading fees. But I've never taken any money from any project in order to promote that token. And so if you want to turn things around, if you want to start getting your money back again, you probably have to also follow a different approach. Now, I'm not a magician. I cannot see the future. This is not how I make this outperformance. I simply just write the market structure. And the market structure for many altcoins is very disadvantageous for most retail investors. Very often the supply of an altcoin tends to grow over time. This here is the example of WorldCoin. But very often the demand doesn't grow as quickly as the supply. And that leads to underperformance. Every single week we've got roughly 700 million worth of unlocks. Bitcoin, on the other hand, has only 284 million worth of unlocks. So the altcoin market has unlocks that are roughly double the size of Bitcoin. Yet Bitcoin is more than 9 times larger in market cap compared to the altcoins. So we are looking at roughly 20 times the selling pressure relative to the market cap for the average altcoin relative to Bitcoin. This is why things like WorldCoin over time go down versus Bitcoin. That's why we see charts like this. This is WorldCoin relative to BTC. And so my approach is not trying to find the outlier here. When everything goes down that much because the early investors and the insiders sell, then I want to get part of that money as well. I am flipping this chart around and then it looks like this. This is Bitcoin relative to WorldCoin. There's a way to get exactly that performance. Had you opened that position at the beginning of the year and you just held it until the end of the year, you would have made more than 300% return. Now this is of course a positive example and there is a lot of volatility in here as well and there are ways to get stopped out. That's why I'm showing the actual realistic returns that are achievable, that I've achieved for the premium copy trading vault. And that's why I also share my alpha over Bitcoin for the entire crypto portfolio. 1.9% per month is realistic, but the right position can go up quite a bit. More than 300%. So there's really no need to try to find the next 10x meme coin. I have made several tutorials on this approach, how to set up the trades, how to do proper risk management, etc. And of course, I'm sharing my own trades as well. For example, over here, this is November 24th, where I entered a short on Pudgy Penguins. So I want to bet on relative valuations. We want to bet on one altcoin doing worse compared to another altcoin that might have high correlation to that alt. But more of the theory, of course, is explained in the videos. And so that's truly how I believe things can be turned around. It's not following the same kind of recipe, the recipe of disaster, but it's instead following the market structure. The odds are stacked against the regular retail investor that just buys an altcoin. Don't be like the average Joe. You want to have an edge in the market. So here's the premium membership. It's currently $125 per month. If you want to be part of the next copy trading pool and you simply just want to deposit your money and set and forget and I then trade for you, then you might consider the annual membership. Those 17% were achieved over 5 months. If we annualize this, that's more than 40% after fees. So the break-even point is somewhere at around $3,000. That's for annual if, of course, the prior returns will persist. That's a big if. Nobody knows if we can keep the performance. But again, I do think that we've got the odds on our side. If it's the first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers.